All right, good morning, everybody. It's Andrew Pawielski, senior broker with Daniels Trading and creator of the Market Dimensions Advisory. Going to be doing a webinar here today, also streaming on YouTube. So those that are in both places, thanks for joining us here today. If you're watching this on recording, make sure to visit danielstrading.com/MDA to get signed up for these webinars so you can watch them in real time, or subscribe and hit the reminder button on the YouTube page that allows you to be send a notice when we go live. So with that being said, let's get started. What is Market Dimensions Advisory? We're going to go through some of the basics here, kind of some of the tools we use, and then go into some live markets for everyone to check out. But before we get there, I do have to quickly show this risk disclaimer. So if you don't mind taking a moment to go through that. All right, again, if you do not know who I am, or you've never spoken with me, or don't know my contact information, reach out. Send me an email. Let me know what you're doing. Let me know how you found me, what your interests are with trading, where you are in the process. That's what I want to hear and know. I've been doing this for almost 13 years, and I've communicated with a lot of people in different phases. People that have traded since the 70s, people that are just now getting into it. They're in college. There's a way to participate in these markets for everyone, especially with the new micro mini contracts. So let me know where we are, and hopefully we can work together if possible. For those that are not following me on YouTube, I suggest you visit the youtube.com, type in Market Dimensions Advisory, check me out, hit the subscribe button, and go through that educational material. Obviously trying to grow that page to be more of a kind of a leader in volume profile trading analysis. I do offer a premium membership. For those that want more information on that, let me know. But you get the 7 TAS indicators, profile scanner, MDA premium room, daily market live stream. We do a seasonal spread review now that I've launched with Brian Cullen here at the firm. And then the true value for those that are really trying to learn market profile are the 10 hours of professional coursework that are involved with that. So just kind of get this kind of business out of the way, and then we'll dive right into some of the content of the webinar. So those that want to get involved with Market Dimensions Advisory, I try to boil it down to these kind of 4 pillars: tools, education, analysis, so you can take action. Another thing that I've tried to implement is I'm teaching to tailor to you so you can take control of your trading. So I'm going to go through, some of this might be a little bit of a repeat, and I've done this topic before, but 4 steps to locating a trade. So these are kind of 4 things that I go through, and I think I emphasize that you can kind of learn within the programming and the education is you need to establish a trend. You need to see if it's a vertical market or if it's a horizontal market. That matters to how you use the TAS tools. So when you go through that 5+ TAS professional education packet that you get with the MDA Premium, and that's a lot of content there, and it's an older module style that was developed when TAS was working directly with Bloomberg and those hedge funds and CTAs that were on the Bloomberg terminals to kind of explain their take on profiling. So it's a great, valuable tool that at the time I think it was like $2,500, $3,000 to kind of get access to, and it goes through all the process of traditional volume profiling to their take on it, and it's a valuable tool. So what you really want to do there is kind of locate the market trend that you're in, and I typically like to look for vertical uptrending or downtrending markets. Then we need to look at the boxes. Are we balanced? Are we in balance? Are these going to be acting as support, or are these going to be acting as resistance? And we'll go through some examples here and what we're seeing in the market. And then where are the high volume locations on this market map, and where's the lack of volume? And what I was talking about in the premium room is just literally circling those distribution areas and seeing where's the high volume, where's the high volume distribution, where's the lack of volume, where's the next high volume distribution, and seeing how the market's trading around those. And then once we kind of establish that, then we start using the other additional tools, like what is the TAS Navigator? How is that green for bullishness, or it's seeing it downsloping, or red for bearishness, or are we getting these exhaustion warnings appearing that's, hey, this is overbought, this is oversold, and tying that in to kind of a snapshot view of what we're seeing in that chart. Now, you can't predict the future. There's nothing that's guaranteeing us to be on the right side of the market, but you use these tools in combination to kind of create this hypothetical if statements, if then this, if this then that, and then what's the bullish case, what's the bearish case. So when we start using some of the Jigsaw tools for volume analysis of the order flow, what's coming in, where the big buyers, where's the big selling, are they validating kind of your bullish case, or are they validating the bearish case? And that's what we tie into it. So I'm going to quickly kind of gloss over some of these, but this is kind of from the TAS coursework, just showing vertical market trends, to the upside, horizontal market trends. So when we're looking at data, price data, and pricing, and this is kind of where volume analysis comes in and market profiling comes in, you're going to see essentially, let's see here, you're going to see this. Let me grab the spotlight. You're going to see these price distributions showing high volume areas, and if you look at traditional volume on a chart, it's going to say, and maybe this is the overnight market, day session opens. Hey, this bar, this daily bar, this hourly bar had a lot of volume, and then as we moved on, not a lot of volume. Or if we're looking at a distribution, we can see 1, 2, 5, 9, 8, 11, 12, 15. Which price had the most participants at that price, and you can rank that in a distribution model. This is an even distribution, so that's great to see. But how does that help with trading and pricing, and what the volume profiling tools do? And I've grown to use the TAS ones. There's a lot out there. Is they put it on its side. Now this can be based on contracts traded, actual volume in the market to show where the most liquidity and participants are trading, and they've established these extremes, these reds and these greens for the high value area high, value area low, and then this blue area for what they call point of control, or the most frequently traded price, the mode, for us to trade around. Now, there's also market profiling based on time. Same kind of thing, where we don't really care. I mean, obviously price is important, and we want to find that price, but how long did we trade there? And usually when it's there from a time aspect, it's going to probably trade the most too. So there will be some similarities versus number of contracts traded and how long we've traded there, but there are discrepancies or divergences between when we map this out on our weekly profiles of, hey, we spent the most time there, but we actually traded more contracts somewhere else. So which is the true support? What is the true resistance? So we like to look at that. But in a nutshell, TAS will take these distributions of where price is traded and a value where they call these value area highs, value area lows. We call them boxes. And depending on the market setup, they're either going to act as resistance, or if we break through, kind of a breakout trade to the upside or downside, and that's what we're really queuing for. So, and on a kind of a vertical trend, when we close above and break out of these value areas, that's bullish. Breaking out of distribution, same to the downside. If we break through the low value area, that's bearish. And to the simplest way to kind of learn the system is if we break through the tops, consider buying. If we break through the lows, consider selling. But after I've evolved with using these tools for a long time and seeing things, there are patterns and there are areas where you can kind of front run some of these levels. So if it is going to fail, you're kind of in at a more attractive price. But with anything, there's a give and take to any time you try to feel like you got an edge on the market. If you're trying to buy before this distribution breaks, and it never gets there, rotates back down, maybe you got in a little too early. So there's a lot of little tips and tricks that we'll trade in the room. So this slide is highlighting Navigator. And we see Navigator goes through a lot of different life cycles. bright green breaking out, bullishness, usually sign of buying momentum coming in. Hey, what's this magenta bar here? This is the system saying, hey, we've got exhaustion coming in. It's not a guarantee the market's going to sell off, but hey, there's a potential chance that we're getting overbought. Sellers are trying to step in, as you can see, and in this instance, we bought, we actually held, but the next time we tested this area, third time through, broke down, and that's where we saw Navigator work its way lower. Same thing again, exhaustion warning. What does that mean? Well, it doesn't mean you have to get out of the trade, but maybe start trailing some risk, maybe start looking for a reversal. We see these green tips, we work our way into this, start working more bullish. So if you look at Navigator a little further, these blue and cyan dots are the system trying to tell you when it's more favorable for maybe a horizontal market or a vertical market. So when you have these moments of yellow, that's kind of saying like, hey, we've been kind of in a horizontal market. Maybe the system thinks it's horizontal, but then we start, you see this breakout here, we start flipping to blue, the cyan color. This is maybe saying it's more favorable for kind of a trending environment. Now, you don't trade on that information alone, but you do recognize it, and you are familiar with what that's being when that's flashing in, and using that to some of the calculations that you might be making for your trading ideas. All right, so we're not going to go through the market profile fast track here. Let me actually get out of this slide. This talks a lot about a lot of the different tools and how they work, different mindsets here. So the goal of today is to obviously kind of show you what is the MDA, what tools are we using, and then dive in some live markets here. And you know, this would be a good time for you guys to throw in some markets that you want to get reviewed, what time frames you're trading. I, of course, use all different time frames, but I really think, to me, you should be really looking at time frames that have a little bit more momentum behind them, recognizing where the daily is, recognizing a 240, but 60-minute, 30-minute, 15-minute are really where we're spending our time. Looking at things like tick charts and 1-minute time frames are great when we see high volume and volatility in the market, but you're really competing against, you know, what are you trying to do there? Scalp, trade a bunch of little, make 1-tick winners, 2-tick winners. I don't think that's a realistic approach for a retail trader that's trading from a computer at home to try to, you know, compete with these multi-million-dollar market-making systems and algorithms that can quickly put bids and asks in and out automatically at the server level. There's just a latency with that and a high success rate that you're just not going to compete with. Do I use 1-minute time frames? Yes. But do I use that to trade off of? Probably not as exclusively as anything else. When you zoom out, we do have some kind of trending areas that playing Monday morning quarterback look good, but you will see a lot of choppiness using these tools around these time frames. So on a 1-minute ES time frame, it's going to be difficult to capitalize on that. So what I typically do with a 1-minute time frame is I will already have kind of like an analysis set up. If things kind of slow down, I want to see where the volume's trading, where those levels are relative to kind of my levels that we've come up with, and go from there. So what I was saying earlier in the session is we have kind of this distribution. This is the market map tool. We have a high volume up here. We have a low volume down here, distribution forming. And what are we doing right now? We're filling in this gap. So we got kind of top heavy. We broke down, found support on this area. Kind of drawing all over the place. Let me erase those drawings. And then we kind of have this volume hole area break out to the upside. Where did we find resistance? On this distribution. And what did we do? We pulled back down. So we're kind of, even though we're not on this, because this is bar 50 to 100, this is bar 1 through 50, and this is bars 100 to 150. We're starting to see maybe we'll start filling in this volume area. So I'm not saying that there's a trade in there. but being aware of that kind of price pattern, we have this volume hole breakout. Where's the target area? Well, first target area could be in here, or a trailed risk when we hit this area. This 1 minute time frame, we're talking about a 2-point, 3-point move, so very, very small at this point in time, but needless to say. So let me go back to a couple different time frames that I focus in on, and we can go from there. So the hourly time frame, this is what we were looking at yesterday, and we had an interesting setup on this given the news over the weekend. We had this kind of we did have this close on Friday. Sunday morning we opened up, we gapped open lower, so it's created this kind of gap of kind of this volume gap. Okay, so everyone always talks about, well, if the gap's traded, you got to fill the gap. That's true. Sometimes it happens quickly. Sometimes it can take a long time. And what have we seen in this market since then? Since we opened last week, or yesterday, this week, on Monday, we've been kind of holding support at 94, and we really haven't completely. And maybe we did at the end of the session yesterday, kind of filled in this kind of gap area, and now we're kind of just trading horizontally. Top boxes are holding as resistance, bottom boxes are holding as support. We highlighted a kind of a breakout yesterday that we're trying to get involved with. Did work slightly, and then during the overnight completely came back. This morning we saw some pivoting here on this bottom box, and now we're entering kind of this 05 3/4. If we can make another run at this, maybe we will break through this. But this chart alone isn't telling all the story here. What else? What other information's out there that we can use to help kind of tell us what's taking place here? And this is why I use multi-timeframes. If we look at this daily chart, we can see, we zoom in here, not that far, we can see we are currently on new boxes that formed 3 sessions ago. We're right on this 08 area, which is a top box. And then we have POC, which is this 29.99. So we have, and this distribution is, these are very close to each other. So how far we are on this 72. We're at a high volume area based on this previous distribution here. And we're, obviously all-time highs, things like that. But we're right at a key point where sellers are trying to defend this 08 and buyers are trying to push through. So that's why we're on this 60-minute time frame through this 04, 5, 6 area. Looks like a great breakout idea, but you got to realize that on a daily time frame, this TAS system is saying there's boxes here, which means if we are in a horizontal market and we're going to stay in a horizontal market for a little bit of time, that this is a pivot area, and maybe we will kind of have this price action take place. But there are things in favor of the bulls that we need to recognize. We see navigators here, it's bullish. Ratio is positive, but you can see it's slightly converging a little. So there might be, if we work our way back through this 99, room for this to run down to 72. So it's kind of a caution to the wind for longs around here. What else do I try to do? Well, I want to file this down to maybe a 4-hour time frame as well. This is kind of a good day trading time frame in terms of an intratrade turning into kind of a pivot, a swing type trade if you can get on the right side. What we see is this gap. We're filling that in. We have boxes based upon that price action. The top boxes started here because that's where we were trading last week. That since has moved down based on this lower volatility. So we're kind of in this little horizontal area. We saw bigger bullishness here in the market work its way back down to almost neutral here, and ratios crossing. So if we do work through this 92 area, that could be favorable for the bears to get navigator lower and this thing continue to cross lower. But if we work our way back through this 05 original bullish setup and we start taking out this technical high, maybe this thing is retraced enough to kind of get more bearish minded traders in the trade that if we could start squeezing them out, we may have enough to get back up to this area. So it's kind of in a neutral area, and that's why it's gray. The Vega thing is neutral. The Vega indicator is neutral now. So that's what we're looking at on the ES right now. And I'm happy to go into this further, but I know other people are throwing in other markets to chime in on. So feel free to continually add some of those markets in there. But when we start looking like at a 15-minute time frame, and this is where I really focus in on these distributions. Where are these forming? How are they forming? Where are these high volume nodes coming in of master point of control? Okay, and those tend to be areas that we touch and target and bounce to. On this 15-minute time frame, we're kind of working our way back to this resistance area with negative navigator. So we do pivot off this and close and work our way lower and get back through 3,000. That's going to be some bearish momentum growing. This pink line, everyone always asks what that is. That's a VWAP, volume weighted average price based on volume, and it's kind of like just a moving average in a way, of volume traded prices, and that's something that you can add on the DT Pro platform. So we're talking about the equities. We worked our way lower, and if we look at kind of our price data on this move lower, and this is where the Jigsaw element or order flow that I use comes into play, and you can kind of replicate this on Sierra charts. There's another program called Bookmap. I've just happened to use the Jigsaw tool for a number of years now, so it's just, to me, I'm very, very comfortable with what it's showing here. But what we basically saw this morning, I'm grabbing my pen here, is on this downward move, we started getting some larger volume participants. And we called it in the premium room. If we started working our way below this big buyer, there's a chance for bears to kind of take control. And they started to. But what happened? They got absorbed. And then we had these large offers that came in at 3,000. Buyers were absorbed, and then we just started getting hit with more sellers getting absorbed here. So that, to me, is sellers were trying to defend. They're failing. If we got through this 01 area, there's a potential pop opportunity back to the open price, and that's what we're seeing right now. And we're starting to work our way back into an area where we had more imbalances. That means more big buying compared to imbalance between, at that price, there was more buyers than sellers, and enough to absorb all the buying and selling. Literally just moments ago, we got this big buying area. So what does that mean? Well, if you're long from below, I use that as kind of a risk management tool. Okay, so if we're long, we're seeing this market just get hit with buyers trying to push its way higher here. But if this fails, these buyers are most likely bigger than us and are single lot trading, or even if you trade 10s, 20s, 30 lots, we're talking about, in some of these instances, 800, 900, 1,000 contracts hitting that offer, filling it, and popping it up. Usually one individual or community entity, and if they're wrong, they probably don't want to be in that trade very long, or the algo systems recognize that, and we start working our way through that area. My firm belief on using this tool is that's where sellers will start coming in, because if you're in a trade and you're long, how do you get out of it? You have to hit the sell button. And if you're emotionally exiting the trade, you're probably hitting a market order, and that's hitting these bids. And if that sell order is larger than what the bids are being shown, or just hitting all those there, the market makers, other participants see that large sell market or large selling coming into the market, and that's when you can quickly see bids and asks adjust quickly, and you'll get a downtick in the market, and then that becomes resistance, and we can start working our way back down. So that's how I view kind of using this tool. And I know it probably went very quickly there, but that's why we do all these sessions and why I have a room where I just kind of drill this concept over and over. And if we are going to pull back, well, what's the target? Well, we had all these participants that came in here. We've got the high volume node of the session here. So this is maybe target number 1. Maybe this is a buy support break here. If we break through this here, now this is resistance. Work our way lower. And we use that in combination with these TAS tools. And that's what we just day in and day out. And this is on the S&P, but you can use them on the crude oil, any market that has price action. You can use these tools in combination with each other. All right, so this is kind of the intraday short-term analysis mixed in with kind of medium-term analysis on the tools. A lot of the updates that I talk with people that are casual traders, if there's such a thing, want more swing time frames. They want to join kind of upward trends, downward trends, and there's ways through the TAS scanning tool that I can help you pinpoint markets that are trending and maybe potential opportunities to get involved on those on pullbacks or upticks to join that trend or when they may be breaking out. So someone's asking quickly while this chart is here, what are these blues? This is the Jigsaw platform. It's an independent platform. If you go to my MDA page, you'll see that I've done a lot of webinars with Peter Davies at Jigsaw, go in and explain it. I've done independent webinars on my own. If you join their email list, they literally do a webinar every day. So there's a lot of education there, and there's a lot of different ways to use the tool. The way I use it is I want to see inside these bars, and I want to see who's buying and who's selling at what price. What's that price point that's bringing in buyers, or where the buyers getting stuck, or where the sellers getting stuck. These circles, if you click on them, literally show that 700 contracts traded this. So they were bid 700 here. So when they hit the buy market, or a bunch of buy orders came in at this price point, 700 offers immediately absorbed it. So think of it like they tried to throw a punch and they hit a wall. They couldn't budge the market higher. So this is, to me, like this is where a wall is. They hit it with 700 contracts, didn't budge any higher, and if we start working our way below this, maybe they're going to get out of their trades and we start pulling back. So maybe it won't retrace all the way back here. We hit it again, resistance. Hit it again, resistance. So if you're short or you're wanting to get short, you try to find, I try to find these areas where buyers hit the wall and use that in combination. If that's like kind of a pivot spot on these TAS boxes or through the VWAP or something like that, instead of just waiting to blindly sell it on here when it hits this box, where are we seeing that buyers are maybe getting stuck? And here's a spot that is showing that it might be stuck. We haven't retraced all the way back down, but if we are going to continue to have this negative navigator and pull back to 3,000, you're going to need to get more buyers like this who step in, who can't move the market any higher, and maybe if it moves lower, they get out of their trades and we rotate back down. So the same thing with the red. The red are more, and I use the word imbalance because you don't know if it's a single entity or not, but it's an imbalance of 900 some contracts sold this market here. There was still 530 contracts to the buy side, so there was active buying participants here, but again, it hit the wall. And then this instance here, we had some kind of iceberg style orders. We had 1,200 contracts traded here, and it could not budge the wall. They're breakthrough. They're filling the bids. So we're seeing sellers literally just kind of hitting a wall. Imagine like a little fence there, and they're once we kind of broke through kind of this technical high or where these offers were, it quickly shot up. This isn't super quick, but rotated back to kind of that previous high volume area. So when we see this action here and it finally rotated down, that's kind of the next obvious target here where we want to buy and break out through this. And maybe these were buyers that are trying to break through this break through this area, and sellers held strong. They held the line. And was it enough to get down to this 3,000, which is the true high volume support level on the day? Not yet. So if we test this 05, 04 again and get through here, we most likely will get more information. And that's the whole point, is we don't know what's going to happen when we hit here. If we see a lot of more of these blue buying hitting this 05, this 06, then it's like, all right, well, they made new highs, but they're getting jammed up. And they may not push higher, and that might be the confirmation to fade it or just get out of your long on that instance. We see a lot of red selling coming in here that are defending this. And the red side, that's bearish, that sellers are showing up and they're defending the level. But if we trade through that, that's a bullish confirmation to me. And that's going to be when we see that quick pop. All the sellers that did come in trying to defend this little uptick, now they're getting squeezed out of their trades. And that's what we look for, and that's why I use this tool. So I hope that answered your question. A little long-winded on that, but there's a lot of content on that, a lot of education on that. That's my take on how I use this tool to kind of just recognize that throughout the day. I want to see where the charts are trading, and then I really want to see where these imbalances come out, a big buying of blue, big selling red, and where they're kind of hitting that wall, so I can either put a buy stop or sell stop around there, or if I'm already in a trade, trail risk up around there, and you know, if it's going to retrace a little bit, I'm already suggesting that you get out. So back to kind of the TAS boxes and tools and how those work. This and the way that I used to have to use these tools a long time ago is literally bring up a chart and then go to the weekly, the daily, the 240, the 60, and kind of see where are we relative to all those. This scanning tool allows you to go in there and automatically do that. You can see when you click on this corn, you can see the weekly levels, you can see the daily, you can see the 240, you can see the 60. And that's great. If you have sectors that you follow and you can quickly click on these and see color-coded, you know, if we're imbalanced bullish, imbalanced bearish, gray is neutral, it's kind of maybe a horizontal market. When you start seeing multiple greens, multiple reds, it's most likely we're trending in some capacity. And as a broker here who works with, you know, 13 years, I've probably opened up over 1,000 accounts. Obviously, some are more active than not. You get a call out of nowhere from a guy that's a farmer or something like that, and he wants to know from a technical aspect, you know, what are hogs doing? And I haven't looked at that market today or the last couple days. I want to be able to, this is kind of how I grew comfort with this. I want to be able to say, all right, you know, corn or beans, from a technical standpoint, we're coming into a weekly support area on this soybeans, you know, or resistance to the top box. We did break through, and if we look at these weeklies, we're rotating around an imbalance. We worked out, it's kind of trending down. These tools allow you to quickly judge that and where you can find some target areas, support areas. I'll use these boxes to help work for creating calendar spreads for options, a lot of different tools. But the real value to me, and that's why I'm bringing it up, is you can sort these markets based on what's above, what's below, and then multiple areas. So these markets here, and I'm actually going to take a screenshot of this and share this in the room, is that these are what I call bullish prime 3 markets. That is, they're bullish weekly, daily, 240. So if you click on these, you can see on these different time frames that we are breaking above the weekly. We haven't, you know, this weekly level, this is using weekly bars. This is a big resistance level that we're starting to break through. We just are now hitting that. Dailies 2, 240s 3, 60 minutes. So we kind of made maybe a high and we pulled back a little bit. We probably got some good support in here. And if this is going to continue to trending up, we want to jump on this when this gets imbalanced. So this is kind of a bullish trend opportunity to either buy on a pullback. You know, if we hit bottom boxes, this would be red. It's kind of a divergence look, or on a new breakout, new momentum to the upside. British pound, same thing. We're breaking out. You know, overall, we've bearish. Kind of all these weeks, all the way back to April, we moved lower. But we spent enough time at the end of August, that we've had new values created, and now we're breaking out to the upside What's the target? Probably a previous bottom box for these technical highs, but you can use these 60 minutes and 240s to trail risk along the way. But this is entering a favorable bullish potential breakout. We pivoted back this divergence, and now if we get back above this 125.33, it's an area that could be a potential bullish breakout to the upside. We're not seeing anything similar setup on the bears, so you never know what's gonna appear on these. But it's a tool I use every single day throughout the day to look for those different setups. All right, so volume profiling, market profiling, and this will be the last thing we kind of cover here today. Before I was showing the DT Pro with our TAS tools, another platform that I heavily use and our data feed ties into is the Sierra Charts. I feel Sierra Charts is probably the best platform for using volume profile, market profile. I think it's $35 a month to have access to this platform. The big complaint I hear a lot of people is that it's hard to kind of get your chart set up. There's so many different indicators and ways to code them that people get hung up on that. Well, I'm your lifeline. I can give you my charts. I can walk you through that and show you how I'm using it if you have an account with me and at Daniel's Trading. But I want to take a bigger look on a weekly basis of what's taking place in these markets. Everyone gets so caught up in, what's a 5-minute chart doing? What's a 15-minute chart doing? Even the daily. Well, let's look at it big picture. Let's look at what are we seeing weekly? What are we seeing monthly? Even quarterly? It helps you understand, like, if we're breaking out, where are some targets based on bigger picture information? And this is that distribution area that I was talking about. Look at these weekly distributions. This is kind of market profile, and this is volume profile. And we spent the most time at this area here, this 16 area, but we traded the most contracts here. And this is what I talk about when you get it's important to know where the high volume is or market profile. It's important to know where it's not. And where are we this week? Well, we broke down on that kind of bearish news. Where did we stop? Well, we stopped almost, I wouldn't say to the tick, but to the point of this high volume area to the downside. And what are we doing? We're filling in this volume area here. So it's not bullish enough to kind of get us up to this kind of previous high volume area, but it's not bearish enough for us to get us through this high contract area and this kind of large distribution and large distribution from the week before. So this is a significant support level. That's what we were talking about in the room. And we'll show a couple daily charts that kind of recognize that. So this is support. This is resistance. We're in a horizontal market. If we can start breaking through the top, and what we were looking at yesterday was bullishness through like 04, 05, 08, target number 1. This pink bar is continuing to run because it's the point of control of a weekly session, and it's not been touched yet. Price is not traded in that. It's called a naked POC, which means I'm keeping things PG here. I won't tell you the real reason. Just kidding. It's hasn't been tested yet. And when you kind of start moving to the hard right edge, you see kind of these POC levels here that are just continuing to run. And they haven't been tested yet. So when we do get some big negative moves and maybe we take out a weekly low, if you're kind of on a 5-minute chart and you're just kind of oblivious to what's going on big picture and you're trying to buy, you see something at 20, like maybe it came down, tested this level, and you're seeing some bullish, favorable trade setups to kind of maybe break back into 75, and you're just only looking at a 5-minute chart, you don't realize that that's a weekly low right there. And it trades, you don't have any stops working, it trades through this low, and all of a sudden it zips down another 10, 12 points, and you're stuck in a trade. What happened there? What news came out? Well, no, we probably hit some stop orders or selling pressure momentum on a weekly time frame that you were trying to buy blindly right in front of it. Very basic thing. Maybe it worked for you, maybe it doesn't. I want to know when we're hitting into those levels. And if we do hit this level, where's a target? Well, probably where we spent a lot more time and probably where we had a pickup in price. So if we do get through this 60, 65 area, this is target number 1. If we break that, What's the next area? Maybe here. This naked POC down to 2,900 had a lot of volume. We spent a lot of time there. It's probably going to be active support. So probably throw a target in there. If you're going to buy the dip, where are we going to buy this dip? Well, maybe around this area here where all this volume and price is held and hasn't been tested yet. We could hit this and run right through it, but you flip on your shorter term charts, you flip on that order flow tool to see where the buyers or sellers are coming in. Watch and wait for an area around here where large selling comes in, they're getting absorbed, they can't get in, and you get maybe a quick pop. Maybe it does rotate back down, but we participated in a nice bite of that apple, or that bite of that trade. So that's how I'll incorporate kind of these weekly profiles. And as you can see, it's not just on this equities. Same thing on, this is very interesting. Where did we break out on the November crude? When we broke out this week, we gapped open higher here. Where did we stop? On this naked POC. And we've retraced back down. We've spent all this time around 6150, broke through that. This is a POC established based on these tools. And we pulled back, broke back through this point of control. Now we're having upside resistance at 5880. We have this high volume area below, this large distribution below. Haven't been able to test and break into this yet. If we start getting back above 5880, maybe we hit this 60, 61. So there's a lot of different ways you can formulate a trade off it. But if you're not using this information in your analysis, and you're only a 5-minute or 1-minute trader, that's great. But you're never gonna. I would think the goal would for you to be in a way to trade less, have more runners in favor with reduced risk, and kind of put maybe luck on your side, rather be luckier than good, to have some of these trades run and not stop yourself short of that trade that I'm comfortable making $100 a day, but you go back and look, there's no reason you should have got out of it. Now it's a $1,500 winner. That's what people are surprised when I show those in my newsletter. Like, how'd you know that was going to be? I don't know anything. I just see these tools and I recognize opportunities that are there. So this is this distribution of time broken out. So as you see, like, it was condensed, it kind of condensed it all together. We can see we gapped open here, traded up to here, and then retraced back down, and then we worked our way back down to the weekly high. Important why we use those numbers. So weekly high held as support, and we shot all the way back up to this resistance area. And then we started finding a little bit of a trend channel here, and finally got that bearish, that news supportive of bearishness that Saudi was going to be back online. And where do we go? Immediately back to this weekly low, and we're starting to try to work our way through this now. And this is now resistance, 58.80, call it 59 even, and we have yet to break through kind of this 57.60, 57.75, call it 57.50 area. So this is kind of a support area that maybe is holding. If we get back through this location, maybe work our way back to kind of this technical high or go for it. You're not trading off this information alone, but you're kind of creating scenarios, hypotheticals on that. If we break this, where are we going to go? Well, we've got a volume hole here. Okay, and this high volume support here, 56. Doesn't mean it's going to be a straight shot down there, but there's a compelling case that we may kind of rotate back down to 56. And there's a lot of other, we could talk about this all day, and I'm sure some of you would like to, but unfortunately we can't. But diving into these tools, you can really get lost in the charts. And I'm not trying to tell you to paralysis through over-analysis, but really kind of mapping out scenarios, targets, support, different things. So I use a number of different tools, all based around volume, profile. This is the last thing that I wanted to show here in terms of daily profiles. So what I do on these charts is I break out the day session. This is the S&P on the left, and I have the extended overnight session on the right. So this allows you to see kind of gaps in the market on a day session where it's pretty much more active participants, but also still getting profiles established on what's traded around the clock in the overnight. And you can get some very interesting information from here. So on a day session basis, we were talking about this yesterday around this 93, 94 area when we opened up in range, and we're starting to work our way lower, kind of in line with this naked POC, couldn't budget. I said if we start breaking through this 94, 93, we may run down to kind of this naked point of control from the overnight session, this 84. Interesting how we opened up here, pulled back, couldn't hit that, break that support area, and we've kind of had overnight or extended trading sessions higher lows. So if we start breaking into these lows, that's an obvious target down to 84, right around here, this kind of day session open. If we break that, now we're getting into kind of single tick areas. Single tick is a term that is often used in the volume profile where it's fast moving markets, didn't spend a lot of time there, and you can see we opened above this day session, pulled back into kind of range, but didn't take the value area higher, the point of control, and immediately worked our way back through the prior highs, and that's been our support ever since. So if we break this, we're breaking into this range. There's a lot of room for this to maybe run into these 80s, 82s, 78s, and this is just looking at no real price action, just time, how long we spent at time, these prices. So this area, to me, is a favorable bearish trade setup. And what will happen, we're not the only ones that know this. People are trying to sell these lows, work our way in here to try to get in there. This might be a crowded trade, and that's where we see on that order flow seller absorption stepping in. And when that fails, they're getting squeezed, and we work our way back up. That's why we use that tool. If we see buyers trying to defend this, and usually that's the last-ditch effort, big buying trying to come in and support this, buy this low, and we get below it, that's when you can see a quick move to the downside. So that's kind of what we're seeing on the day session and the extended trading session. And in the bullish setup I set up yesterday, targeting, this is kind of a target area because this naked POC here, if we could quickly hit that, hold, rotate back down, so we'd want to take some of that off. So crude has that. We have it for volume and all the other different markets. So we're back to this chart because it's main on the screen. We've rotated back down. Didn't get back, didn't challenge it. When this first came out, looking at the hard right edge, we didn't have any of this information here to the right. That was a trailed risk spot. It was a spot that we hit a wall, that we anticipated some bearishness stepping in, and why we did that, because if you were long from below, you just gave back 4 points. And if you're a swing trader, position trader, I think try to marry the two. You wouldn't maybe want to get all your positions off if you have a nice long based on kind of this. Maybe you still have part of a position on to kind of break even. You still would maintain that, and you can always add on a little bit of a pullback and still have that outlook. Now, for the years, the big issue was I'm only a one-lot trader. I can only handle margin for one contract, and you don't have that luxury, or you're not comfortable risking more. Well, with the introduction of the E-micro minis, you can now put 5 on, which is half the size on a move like this, and maybe take 2 or 3 off and still hold another 2 here. There's no, in my mind, there's no paper trading mindset anymore. If you're not comfortable risking an account that has $5 per point with margins of $100 per contract, and that 20-point move that was $1,000 is now $100, tenth of the size. You have no business being in futures trading. It's a leverage product. You should still trade stocks or ETFs, but you're just maybe not ready for it. Of course, it's fun to paper trade, and what if I would have done this and that, and at the end of the day, it's nice to try to create a plan there. But now that you have a tool that's so deleveraged that you can actually trade with real money, and it's crazy how that switch changes, even though it's $1 at risk on these ticks, you still might get that, sweaty palms or white knuckle moments on that, because no one likes to lose money, no one likes to be wrong, but now you have skin in the game and you can actually have a track record based on what you're doing, very small scale. So I encourage a lot of people to start doing that and implementing that into your trading. No trade for one day, you lose money and give up. Trade the micro contract for 6 months, a year, see how you're doing, and then assess if it's a waste of your time. Don't let a couple bad trades, obviously if you have no plan and you can't have any good risk parameters or discipline, maybe you shouldn't be trading, but using that micro contract, I think is going to, and it's liquid, and a lot of people are doing it, it's going to go a long way. So again, there's risk in all markets. Can't predict anything. Past results are not indicative of future performance, so always be aware of that. But these are the tools that we use. I highlight in the Market Dimensions Advisory. So we'll go into this premium setup. So MDA is $297 a month. Okay, so if you're going to get all 7 TAS indicators, that's $297 a month from TAS. And if you want the profile scanner on that, it can be upwards of $444 a month. I know they run a lot of packages there. If you're going to commit for a year or two or something like that, be an elite member, you can get that price whittled down. We also have that too. If you purchase for an annual contract, you can get 30% off. But you're not going to get someone every single morning dedicating 30 minutes to an hour of highlighting the tools in real time with the Jigsaw platform, trying to convey my analysis, kind of room environment. You're not going to get that. And a lot of people sign up for that first and then come to me. So we do have a quarterly option of room only, but the true best value, best way to do it is to sign up for the monthly. Have an account here so you get the indicators. And then in addition to that, there's 2 courses over 5 hours each. That TAS professional course that shows all the fundamentals. I actually could just bring this in. So let's actually do that real quick. You go into Daniel's Trading, logged in, Premium Education, TAS Market Profile course. You're going to see these 4 modules here, 77 minutes, 12 minutes, 72 minutes, 85 minutes. So it's got some of their older branding and then a couple tools that maybe aren't necessarily in there, but you can watch these. It has an agenda on them on what you're going to be covering in there. Market activity, horizontal. I mean, this is great information that watch it every now and then. If you've seen it before, watch it again. You kind of gain information from that over and over. So that premium information will be there for you once you sign up. Here's a course in here that I did with Steve called Grow, where he talks about a lot of the trading TAS rules that they have here, and then I go into my part of I did create a kind of a booklet to go along with a lot of the fundamentals of MDA. So a lot of education. A lot of people come to me and say, hey, I like what you're doing on YouTube or that. I want more information. This alone, even if you're going to sign up for a month or 2 and go through the coursework, is still favorable than buying $1,000 worth of education that is available for sale through TAS. So you get that implemented in there. And then if you have the trading account, you get the tools, and then you get the trading room. So to get more information, go to danielstrading.com, get MDA. Watch my YouTube page, get that information. So I know we got a lot of questions that came in. We're hitting on an hour here for this webinar, so I'm going to have to wrap things up. If you have any questions specifically about Daniel's trading or what I'm doing, how you can implement these tools, contact your broker. They'll definitely help you out. You can join the MDA and still work with that broker and just use the tools. If you're trading at another firm, we can transfer your account over here. Got competitive rates. Want you to be in a position where you can start maybe getting some actionable trades, getting on the right side of the market here. So again, thanks for everybody that attended via GoToMeeting. If you watched this on YouTube, thanks for watching. If you're watching this via recording, reach out to me directly, and we sign up for the next live access.